Assalamualaikum everyone. We are from Group 5. Today our group will be evaluating the economic prosperity and trade policies implemented during Biden's administration from 2021 to 2025. This report is designed as a policy briefing for President Trump's second administration. We will be examining the effectiveness of President Biden's worker-centric trade strategy, which focused on rebuilding domestic industries, protecting American workers, and reducing its dependence on foreign supply chains. Our analysis will assess both the benefits and shortcomings of these policies, as well as their impact on Americans' economic competitiveness and international trade relations. The central question guiding our report is whether Biden's trade policy has successfully implemented or strengthened Americans' prosperity and prepared the United States for long-term economic competition. So basically, to understand the impacts of Biden's policy, we first need to understand his overall strategy. Unlike the previous administration that emphasizes free trade agreements, Biden adopted a strategy called a worker-centric trade policy. The main goal was not simply increasing trade, but to ensure that the trade and investment benefited American workers as well as the industries. There are three major policies shaped this approach. The first, the CHIPS and Science Act allocated over $52 billion to encourage semiconductor production within the United States. This aimed to reduce the dependence on foreign chip manufacturers and strengthen the national unity. The second one is the Inflation Reduction Act. This provided a large-scale subsidies for clean energy industries, electric vehicles, and also green manufacturing. The objective is to attract investment and create high-quality jobs within the United States. The third one is Biden maintained many of the tariffs imposed on China during Trump's administration. At the same time, he promoted a strategy known as the friend-shoring, which encouraged supply chains to move forward trusted allies rather than strategic competitors. So basically, he promoted a strategy that is called friend-shoring, which this is to encourage supply chains to move forward with allies rather than strategic competitors. So together, all these three policies represented a significant shift towards a government that supports industrial development and economic security. So while Biden policies aim to strengthen domestic industries and protect the national interests, the key question is how these strategies can be explained through international relations theories. To answer that, I will now pass to the next presenter, Wani, who will be discussing our analytical framework and policy analysis. Thank you.
So now I'm going to explain about the analytical framework. So there are two frameworks, which is economic nationalism and liberalism. So the first theory is economic nationalism, which is closely associated with realism. This perspective views international trade as a competition between states where government prioritizes national security, economic strength, and strategic interests. According to this theory, countries may use trade policies such as tariff, export control, and investment restriction to protect domestic industry and maintain their competitive advantage. This helps explain why Biden administration continued many of the tariff on Chinese goods and services and impose restriction on advanced technology, particularly in sectors that are considered important for national security. And the second theory is liberal institution. which emphasize cooperation and the role of international institutions. This perspective argues that countries can achieve greater stability and prosperity by working together through shared rules, agreement, and economic partnership. Instead of focusing solely on competition, liberal institutions highlight the benefit of collaboration among allies. This helped explain why Biden administration promoted initiatives such as the Indo-Pacific Economic Framework or IPEF, which aim to strengthen economic cooperation, supply chain resilience, and common standard among partner countries in the Indo-Pacific region. So overall, these two theories demonstrate that Biden's trade policy is not based on a single approach. Instead, it combines elements of both economy, nationalism, and liberalism institutional. So now I'm going to explain about the policy execution. So the first one is regarding to exchange toward China. The Biden administration largely maintained the tariffs that were introduced during the Trump administration. Rather than reducing trade barrier, it strengthened measures aimed at limiting China access to sensitive technology and strategic investment. This action reflected concerns about national security, technological leadership, and economic dependence on China. As the result, the administration pursued a stronger form of economic decoupling in key sectors such as semiconductor and also advanced technology. The second one is the administration promoted a strategy known as friendshoring. The goal of the friendshoring was to reduce reliance on China by encouraging companies to move their supply chain to trusted partner countries, which is do the cooperation. And however, the actual outcome was different from a complete return of manufacturing to the United States. Many businesses choose to relocate their production, like factory, to countries such as Vietnam and Mexico. They choose this country because of they have the lowest cost, which is they offer a lower cost while still allowing access to global market. For example, for the iPhones, many technology stuff. This shows that why the policy successfully diversified supply chains, it did not fully achieve reshoring, which is the return of production to United States. Instead of global supply chains adapted by rerouting production through partner country. So overall, the Biden administration trade policy reflect both economic, which is the first one is realism and also liberalism. It adopted tougher approach toward China because they see China as a competitor, and it also seemed that China have a big opportunity to help their economic growth.
Thank you, Hazwani. Now that we understand the strategic and theoretical frameworks behind the Biden administration's economic policies, let's look at the actual outcomes. I will be covering the policy implications. First, how these trade decisions impacted America itself, and second, how they rippled out into the wider realm of international relations. Let's start at home. When the Biden administration introduced massive subsidies and strict Buy American clauses, it created a mixed bag for the domestic economy. On the positive side, it successfully sparked a massive wave of private sector investment. We saw a literal boom in domestic factory construction, particularly in the semiconductor and green technology sectors. It proved that government incentives could bring manufacturing back to American soil. However, on the negative side, this came at a high cost because the policies forced companies to source materials strictly from domestic suppliers. It created severe supply chain bottlenecks. There simply weren't enough local materials or specialized labor to keep up. This supply squeeze, combined with massive federal spending, fueled domestic inflation and forced interest rates up, creating a direct financial strain on everyday American consumers and businesses. Now, let's shift our focus outward to the global stage. Trade policy is foreign policy, and these decisions had massive geopolitical consequences. Friction with our closest allies explained that by passing laws like the Inflation Reduction Act, which heavily subsidized American-made electric vehicles and clean energy, the US accidentally alienated its closest partners. The European Union, South Korea, and Japan felt deeply betrayed, viewing these subsidies as unfair, discriminatory protectionism that locked their companies out of the US market. The second one is a geopolitical vacuum. Furthermore, because the administration completely refused to offer traditional market access or tariff reductions in frameworks like the Indo-Pacific Economic Framework, America lost crucial economic leverage. The result is, in regions like Southeast Asia, countries where America was asking for regulatory compliance without offering any real economic rewards. Consequently, this policy gap left the door wide open for China to expand its own trade relationships, pushing key regional partners closer to Beijing's economic orbit. With these heavy domestic and international impacts in mind, I will now pass the floor to Afika, who will outline how President Trump can strategically navigate and fix these challenges. Thank you.
Based on our analysis, there are three main recommendations for President Trump's second administration. So the first one is focus on real trade deals instead of broad frameworks like IPEF or Indo-Pacific Economic Frameworks. So the administration should prioritize bilateral trade agreements that give American businesses better access to foreign markets and help increase US exports. So this approach can provide more direct economic benefits and strengthens American positions in global trade. Second, reduce unnecessary regulations attached to the government subsidies. Simplifying the requirements for the businesses can speed up investments, encourage more companies to expand their operations in the United States, and support growth in manufacturing, energies, and other key industries. Third, continue using tariffs strategically. So high tariffs should remain on critical Chinese technologies to protect US economic and national security interests. At the same time, exceptions should be given for important raw materials that American factories cannot easily obtain elsewhere. So this will help manufacturers stay competitive and avoid high production costs. So together, these policies can support domestic industries, attract investments, and strengthen the US economy. In conclusion, President Trump can build on the recent growth in US manufacturing while addressing inflation and trade challenges. By pursuing stronger trade deals, reducing regulatory barriers, and using tariffs more strategically, the US can strengthen its industries, create jobs, and improve long-term